The year is 2000, and the dot-com bubble is about to burst. Markets are chaotic. Technology is changing finance forever. A small group of traders believe something radical. What if trading wasn't about gut instinct, but about math? They didn't want screaming trading floors. They wanted probability models. They didn't want hunches. They wanted algorithms. So they built Jane Street around one idea: use quantitative thinking to trade better than everyone else. At first, they focused on a niche corner of finance, ETFs. Back then, ETFs weren't the giants they are today. But Jane Street saw what others didn't: a future where ETFs would dominate investing. And they were right. Imagine you want to buy an ETF. You press buy. The trade executes instantly, but who sold it to you? That's where Jane Street comes in. They act as a market maker. They are constantly quoting two prices: a price they'll buy at and a price they'll sell at. The tiny difference between those prices, called spread, that's their profit. Now imagine doing that, not once, not 1,000 times, but millions of times a day. Across stocks, ETFs, options, bonds, currencies, and across markets in London, Hong Kong, and Singapore. They aren't betting on companies to succeed. They're running the plumbing of the financial system. And when volatility spikes, market makers like Jane Street become even more essential. The people at Jane Street. At Jane Street's office, not just finance majors thrive. You'll find math Olympiad champions, physicists, and more. They recruit from prestigious schools like MIT, Harvard, and Princeton. Their interviews are legendary, challenging candidates in unique ways. Questions can include the probability of coin toss or pricing games. They emphasize thinking over memorization, reinforcing their approach. At Jane Street, trading is truly applied mathematics. The rise. As ETFs exploded in popularity, Jane Street was already positioned at the center. Over time, they became one of the largest ETF market makers in the world. They generate billions in revenue. They trade enormous volumes daily, and yet they remain private. No IPO, no earnings calls, no media tours. In a world obsessed with visibility, Jane Street chose invisibility. Because in quantitative trading, secrecy is survival. If competitors discover your models, your edge disappears. Jane Street is not a hedge fund. When people hear trading firm, they think hedge fund. But Jane Street isn't trying to beat the market. They're trying to make the market work. Hedge funds make directional bets. Jane Street provides liquidity, aligns prices across markets, captures tiny inefficiencies. They don't need the market to go up. They just need it to move. Understanding Jane Street's unique strategies helps clarify their role in the market. In March 2020, the world was shutting down. Cities went silent. Flights stopped. Stock markets around the globe were in freefall. Investors were panicking. Trillions of dollars were wiped out as markets crashed. While most were struggling to survive, one mysterious trading firm was thriving. That firm was Jane Street. It was having the most profitable day in its history. During the chaos of the market crash, Jane Street made more than $1 billion in a single day. Here's where things get shocking. In recent years, Jane Street has generated over $20 billion in annual trading revenue. That means this small firm often earns as much as major banks. Let's compare Jane Street to some major banks. Goldman Sachs, 45,000 employees. Citigroup, 200,000 employees. Jane Street, just 3,000 employees. Yet Jane Street still produces bank-level profits. That's the highest profit per employee ratio in finance. So next time you buy a stock, next time you trade an ETF, next time markets feel chaotic but your trade executes instantly, there's a good chance Jane Street is on the other side. Not gambling, not guessing, but calculating. In the shadows of Wall Street, powered by math, probability, and code, Jane Street quietly became one of the most important financial institutions of the 21st century. And most people don't even know its name. But even giants stumble. In mid-2025, India's top market watchdog SEBI accused Jane Street of manipulating index prices. The firm was temporarily barred from trading and faced a massive frozen funds order. July 2025, SEBI issues an interim ban and freezes approximately $567 million in funds. Jane Street deposited the escrow and fought back legally. The firm didn't go quietly. They resumed trading under restrictions. Jane Street challenged the allegations against them. Fast forward to early 2026, and a new storm emerges. A lawsuit filed in Manhattan federal court by the bankruptcy administrator of Terraform Labs, the entity behind the ill-fated Terra USD crypto ecosystem. The claim? Jane Street used insider information to gain an advantage before the May 2022 crypto collapse. Allegedly, this position led to nearly $40 billion in accelerated losses. Jane Street denies the claims, calling the lawsuits baseless. But the public narrative is now explosive, with rampant speculation and social media buzz. Legal battles are heating up, turning Jane Street into a controversial figure in the crypto world. Social media lit up when Bitcoin's price dropped sharply, and some blamed Jane Street's trading algorithms. Rumors spread about algorithmic selling at key times, but analysts reject the idea of manipulation. In other words, no solid evidence yet, but suspicion, noise, and speculation are louder than ever. The fall of Jane Street has had significant consequences in India. SEBI stated that this episode led to tighter oversight in derivatives markets. Upgraded surveillance systems were necessary to avoid similar incidents. Refined rules were implemented to enhance market integrity. Regulators want to avoid this kind of uncertainty in the future. Whether Jane Street is guilty of illegal behavior or simply caught in a complex web of global markets and public perception, regulators are now watching closer than ever before. So what's the next chapter in this tale of Jane Street? Will the lawsuit over alleged insider trading go to trial? Could other regulators join India's scrutiny? How will Jane Street's reputation survive this moment? In a world where trading is faster than ever, even the most sophisticated firms face risks. Markets are interconnected, creating new challenges and controversies. Even the most sophisticated firms aren't immune to controversy. If you enjoyed this deep dive, hit like, subscribe, and comment below. What do you think? Genius strategy or outright manipulation? Until next time, stay curious.